93% of people are not investing in cryptocurrency because they're scared. Scared of failing, scared of losing money. Scared money, of course, don't make money. And look, honestly, they're not wrong. Crypto's freaking crazy, man. Out of 560 million crypto investors worldwide, only 172,300 are crypto millionaires. That's less than 0.04%, meaning most people just get their asses handed to them relentlessly. So how do you give yourself the best chance of success? Well, you follow the gosh darn data. And in this video, I'm going to break down the top reasons why cryptocurrencies fail, why people investing in them fail, so that you can spot the red flags, avoid the traps, and try to pick the damn winners instead of the losers. Oh, there's a lot of losers out there, man. It's bad. And the winners are few and far between. The first thing to watch out for is a cryptocurrency that lacks any kind of actual utility. I know, meme coins, I get it. It's a different story, okay? But even then, you see the value of those fall through the floor very quickly because there is no real reason to own them. And what I mean by utility is it's got to have some kind of real-world practical use or purpose. Utility is what gives a coin or token some kind of value beyond just hype and speculation, which is all meme coins trade on, right? Because once the hype and speculation fades, look at the graveyard of meme coins already from 2024. Okay, now we're here in 2025. How many are dead? How many didn't make it? How many are basically irrelevant already that were once the big thing of the week? There has to be some kind of substance at the core of a cryptocurrency to keep people coming back. So this could be things like real-world payments, access to a platform or service, maybe use this collateral, something like this, paying out some kind of dividend, maybe trading fees and they pay out if to token holders, for example. So when you're searching for your next cryptocurrency, ask yourself, what problem does this actually solve? And why would anybody else actually buy this beyond simple hype and speculation? How urgent do you think it is to go out and actually have somebody buying this thing? What is the purpose? What's actually going to drive new users to buy it? That will tell you how much utility a cryptocurrency actually has. Stuff like governance tokens, for example, you don't need to buy that shit. Nobody gives a fuck about governance tokens, okay? Now, I know what you're thinking. Again, meme coins lack utility, so how can we be in some kind of meme coin crazy cycle if they lack utility? Look, just to be clear, a cryptocurrency won't necessarily fail immediately due to one of these reasons alone, but it has a hard time keeping people involved. Let's put it that way. The more of these factors a cryptocurrency has, the more likely it is not to do well over any kind of time span. Look at most meme coins. Most of them have their best performance in the first week or two, maybe the first month or two, and then they kind of tend to fade into irrelevance because there's more meme coins get created. One thing to remember too with a lot of these meme coins, the community is established first because that's the demand, and the utility can be created afterwards by the team, which we see happen sometimes. Like Shiba Inu created a lot of utility for the SHIB token later on once they used that virality to get attention from the meme perspective. On the subject of meme coins, DWF Labs even published a report on January 2nd that said the meme coin sector is maturing into value creation through cross-vertical tokens that combine virality with utility. And now that we have Trump coming in, a new SEC coming in America, maybe meme coins will actually start to implement utility because they won't be terrified of getting chased down by the SEC. So DWF Labs believes this will take meme coins from a cultural phenomenon to real-world use cases. I think we'll see a lot of that coming in the not-so-distant future. Stuff like Pengu, the Pudgy Penguin token, might be a leader in that, for example. And this leads perfectly on to the next reason why cryptocurrencies fail, and that's having a weak community. You see, cryptocurrencies thrive or die based on the size and the strength of their communities, aka the dedicated token holders and advocates who are willing to get out there and talk about their coin and why it's awesome, why other people should buy it. And they buy more of it and they hold on to it. This is what fuels a cryptocurrency's network effect, its adoption rate. Whether you like it or not, a cryptocurrency with great technology, it's just not enough to guarantee success. In fact, there's a lot of cryptocurrencies out there that have great technology that no one gives a crap about, man. That's because adoption starts with people. So cryptocurrency must have something that resonates deeply with community members in order to keep them connected and to keep them coming back for more, and ideally to get them to go out and tell other people that they should come in too. Take Bitcoin, for example. Its value today isn't just from its code. Great code, right? It's from the adoption, the millions of owners, the developers, the advocates, people like Larry Fink out there shilling Bitcoin for us who believe in its vision of sound money. The community is insane. Take meme coins as another example. Community members can connect through memes and jokes and entertainment. Strong cult-like communities, think about XRP, Cardano, and when I say cult, that's not an insult. You guys are hardcore communities and it's awesome, okay? It creates a sense of belonging among token holders. Everybody has a shared vision for what this technology can do for the future, and it's exciting to be part of. Okay, but this is essential for a cryptocurrency to have success. You see, without an active and engaged community, there are fewer users joining, okay? Fewer people actually sticking around. Things just tend to fade off into irrelevance, and I've seen it happen with so many cryptocurrencies. Adoption, therefore, stagnates, and then obviously everything just gets worse and worse from there. It leads to failure. There's no money for the team to do things if they can't sell some of their tokens to hire new developers and get exchange listings, all this stuff. Nobody gives a crap and just slowly fades to zero. Failure to achieve critical mass happens all the time, okay? You need to reach a certain level for network effect really to start taking off, and the vast majority of cryptocurrencies never get there. So think about partnerships. Think about integrations that a cryptocurrency actually has. What have they announced? What do they have planned? Are they actually fulfilling that plan? Will they team do things that will keep the community around? How many people do these actually bring to the cryptocurrency ecosystem overall? Okay? Because guess what? Without some kind of a strong community, a cryptocurrency is just going to fail. And it's happened many, many times. And if you see the community behind your cryptocurrency being particularly weak and unengaged and not interested and only talking about when moon, you're probably in the wrong coin. Now, before I talk about what to watch out for in cryptocurrency tokenomics, I want to take a quick second to let you know about today's video sponsor, Altura. Are you a gamer or developer looking for the next big thing? Then check out today's sponsor, Altura, the perfect mashup of blockchain and AI. Altura empowers developers with easy-to-use tools, and this awesome crypto gaming platform has built the world's first AI toolkit for GameFi developers, taking a step forward to be the market leader in Web3 AI-enhanced games, bridging the gap between gaming and the artificial intelligence world. It has an AI generation tool wherein developers and gamers can design assets with just one click. It also has a groundbreaking NPC engine that brings non-playable characters to life by giving developers the power to craft NPCs that actually think. And the NPC Engine Plus also gives them memories, which allows for even more unique relationship building with those NPCs. Say goodbye to the boring canned responses and robotic NPCs that we've literally made memes about. All of this can be played in a game world that is easily designed and easily modified using Altura's game engine. And there is more. Altura's Play Wallet is your all-in-one gaming wallet. It integrates effortlessly right across Xbox, PlayStation, PC, and mobile, allowing you to manage your assets on the fly without ever hitting pause. How convenient is that? Aside from the tech, Altura also ticks a lot of other big boxes for crypto enthusiasts. The ALU token has a strong community ownership, no whales, no VCs controlling supply. It has even collaborated with top gaming industry players like Unity, Immutable X, and over 250 Web3 games. Learn more about the future of blockchain right now. Click on the link down below, and thank you for supporting our sponsors. Now let's talk about bad tokenomics. See, a lot of gaming models like Axie Infinity really struggled with sustainability, leading 3 out of 4 games to fail. Play-to-earn games like Axie Infinity let players earn cryptocurrencies and NFTs that can then be cashed out for real ka-ching world money. The more players that came in, the more value that was created. That's the idea anyway, until it wasn't. Axie Infinity's token still over 96% away from its all-time high of $165. 3 years ago. Will it ever go back there? Uncertain, let's say. You never know. I don't want to say never, but a lot of cryptocurrencies never make it back to their previous highs. Now, investors might cash in, but if the tokenomics model isn't solid, things can do and will crash and burn. Tokenomics refers to a cryptocurrency's economic model, so you need to be researching things like its token supply, its token distribution, its token inflation, the treasury, the community, the investors, all these. Why again, we can go back to the start. Why should anybody even buy this token in the first place? All that stuff's very important, but why should any new people buy the token? If a cryptocurrency issues too many tokens or fails to manage demand, when this happens a lot, too many tokens come in, price just collapses. Early investors might profit, but as more and more people cash out the rewards, token price keeps falling. You wipe out any community that could have existed. The token's value will keep dropping, Buyers will keep drying up, liquidity will keep drying up, volume keeps drying up until you hit zero. And it's not just gaming tokens that are subject to bad tokenomics. In fact, a huge amount of cryptocurrencies are. Sam Altman's biometric digital ID project WorldCoin has seen its token price dump by around 80% from its all-time high of around $12 back in March 2024 to around $2 in January 2025. Not saying that can't recover. It's obviously a big and important thing because it's backed by Sam Altman, but that's tough, man. The reason for such a steep decline like this is, once again, poor tokenomics that deeply favored Sam and his buddies and not you. The problem with WorldCoin is its excessive token supply of 10 billion tokens, of which the largest portion was allocated to insiders, and the top 10 holders of the token at one point held 91.5% of the total supply. It's so tiring, isn't it? This, of course, led to fears, rightfully so, of centralization and mass sell-offs once the team began unlocking their tokens, all of which, of course, has come to play. Now, this isn't to say cryptocurrency that bad tokenomics can't recover, that they can't change their tokenomics, that they can't have speculative runs based on hype and all that stuff. 100% all that can happen. Give it enough time, though, and this stuff works heavily against the cryptocurrency, and they will end up failing unless some kind of significant thing changes that moves it in the opposite direction. And even then, it may be too late if the value has already been extracted sufficiently by insiders and the reputation has been irrevocably damaged and the community has been irrevocably screwed. Okay? So be smart. Knowing cryptocurrency's tokenomics can help you avoid getting burned. Another reason why cryptocurrencies tend to fail is, well, because they can quite literally run out of money. I've seen that happen so many damn times. Now look, most cryptocurrencies are run by some kind of a foundation. The foundation usually has some kind of a treasury and some kind of a marketing team behind it, usually funded by some kind of token inflation or some kind of business model where they make real money, which most companies in crypto don't, but it's a different story. Running a blockchain can be pretty expensive. You need lots of developers, you need lots of stuff going on. You need to give out money to have more developers come. And if they're spending too much money and not generating enough revenue, most blockchains, then this can become a problematic situation, particularly in a bear market when investors sell up and leave, leading to a price decline, layoffs, stagnation, revenue decline, usage decline, gnashing of teeth, pulling of hair in general, melancholy, let's say. Pretty bad. Anyway, Polkadot, for example, took a massive hit during the 2022 bear market, dropping 89% from its all-time high of $53. Gosh darn it, I should have sold at $53 and not locked it into a pair of chains for 2 years. Anyway, November 2021 to where it is today, okay? So look, since then, there have been a lot of concerns that there's not a lot of money or not enough, left to keep the blockchain running and stuff like that. And it's probably going to be fine, but in June 2024, the Treasury report, Polkadot's head ambassador said, at the current rate of spending, they were spending a lot of money back then, the Treasury has about 2 years of runway left. Although the volatile nature of cryptocurrency denominated treasuries means that when the markets are up, suddenly they get a much bigger runway. And if they're smart, they move into cash and then they can survive better. But it does make it hard to predict with confidence how long a company can last for, especially if they mistime things. Now, at the time, Polkadot's treasury has around $245 million worth of assets. So yeah, that's a bit of cheddar, That's a bit of cheddar. That's not too bad. But if that's only a couple years of spending, maybe you guys should look at reducing spending. But a treasury balance alone does not give you the entire picture, okay? It's just a little snapshot of what's going on in a blockchain's finance situation. What's also important to account for here is how a cryptocurrency company or foundation is spending the money that it makes. In Polkadot's case, it was spending about 40% of its budget on advertising, influencers. I did some great content for Polkadot back in the day. Conferences, events, all that kind of stuff. But 7% of the total staking rewards is sent to the treasury to replenish those funds. So if you plan to hold any cryptocurrency for the long term, and especially during bear markets, you have to understand its financial situations. Will it actually survive the next bear market? Because if it's burning through too much cash too quickly, it could be a problem. This is not shade on Polkadot, by the way. Polkadot's great tech. They do good stuff like Polkadot, okay? We're just using this as an example of, man, these companies can spend crazy amounts of money. And the money being there is not always a given. Now, it's no secret as well, the cryptocurrency industry moves fast, so much so that the ever-changing regulatory environment is quickly changing and evolving, and staying ahead, of course, is not easy for cryptocurrency projects or investors. A lot of these companies spend huge amounts of money on compliance and stuff as well. Cryptocurrencies don't neatly fit into existing regulatory frameworks. Maybe that's going to change under the Trump administration, and we'll see a new renaissance of cryptocurrency regulation. So a lot of times, cryptocurrencies can fail due to regulations that stifle innovation. Look at Uniswap. Uniswap promised to give fee sharing years ago, but has been terrified of the SEC, so they haven't. Harsher, misguided regulations cripple the industry by creating barriers to entry, limiting adoption, scaring away investors. Everybody still thinks crypto is a scam. There's a lot of scamming in crypto, partially because we haven't had enough regulations to come in to protect people and to make things clearer. And anyway, sometimes the regulations can cause some crypto companies to scale back or even shut down their operations completely in certain jurisdictions, particularly the USA. It's happened so many times. In America, again, post-Trump, we'll probably see things change, but you can't trade futures, you can't invest in early-stage tokens, you can't even receive airdrops. Privacy coins, as an example as well, have been beaten to death by regulators who are doing everything they can to stop them because you can't have privacy because you're probably doing bad things. Even if you're not doing bad things, screw you anyway. There have been at least 60 delistings of privacy tokens on exchanges in 2024 alone, the highest since 2021. That's the old saying, when Monero's outlawed, only outlaws will have Monero. The privacy coins, of course, that suffer the most from these delistings. Monero, great coin Monero, big fan of Monero. Zcash, Rose, and many others. Because of this, Zcash is down around 98% from its all-time high. It's also got problematic tokenomics, different story. But anyway, unless the regulatory landscape radically changes, this sector will continue to struggle. Okay, so look, these are just some basic things. There's a whole other story we could go into behind like new launches and finding things on Dex Screener, malicious contracts, unlock liquidity, all kind of stuff. But that's another story for another video. I hope at least this was useful and gave you some overview on some things to look for and things to think about before you invest in any given token. That's it. See you in the next video. Peace.